Every trader wants to be consistently profitable, but how many traders are consistent? Do you have a consistent approach to the way you prepare for your session? Do you have a consistent plan you follow through when working out the context for placing your trades? In this video, we're going to go through my process that I use to determine context, and I hope you're going to find that valuable because it might inspire you to come up with your own process. So I've written down the structure that I follow every time I do a market report. Now, I don't write this on the market report because, as we're going to find, when you talk about trades, you're actually talking about all of this at the same time. And this makes it really difficult to learn trading. So I'm going to go through this first, and then I'm going to show how this applies to the market report. This is exactly how I trade, which means that because I trade 2 to 3 sessions a day, and I write market reports on the weekend, and I live stream, I need to follow the same process each time. Otherwise, it would be too exhausting to create a new one. So I will go through time frames, monthly, weekly, daily. I look at 3 areas: momentum, magnets, and measured move. Basically, who's in control, where I think we're going, and where people will be taking profit. Because I use Al Brooks' style of price action trading, I look at, are we always in or are we in a trading range? Because I'm a price action trader, I look at the market cycles, spikes, channels, legs, trading range. I'll look at different market structures, doubles, triples, double tops, double bottoms, wedge tops, wedge bottoms, and all the combinations of those. For me, the most important part of trading, and the part that drives all of the other work I do, is about breakouts and failed breakouts. A lot of my videos about spikes, spike high one, spike low one, breakout, failed breakout. I then do my best to look at orders. So stop order entries, limit order entries, potential targets. Then I look at risk, where are their stops, success and failure. Then for next week, I look at probability, risk return. Now I do all this automatically. So I have the DAX futures chart here. I've got the FDAX, which is the continuous contract. We're going to start on the monthly chart here. Here's the monthly chart. Momentum, magnets, measured moves. Well, where's the momentum? The momentum is to the upside. This is a very strong bull breakout bar, and it's closing above the prior bar. That means the momentum is to the upside. Where are the magnets? Well, we've been saying 21 and then 22,000 are the big round numbers. We didn't stop at 22. This is a bull channel. Traders are buying pullbacks below the bottom part of this channel, looking to go through the top of this channel. Are we always in long? We're in a trading range. Well, we're always in long. The bears tried to create a trading range here, but it ended up being more like a final flag. This was actually 3 pushes down and we broke to the top side. So it's a kind of a wedge, which failed. That means that 20,000 is a magnet for later on. What phase of the market cycle are we in? Well, this is a spike and channel. It's had a number of legs up, and instead of pulling back to the start of the channel here or here, we've actually broken above it. The chance of that happening is about 25%. Typically, a bull breakout of a bull channel will fail within 5 bars. So at some point within the 5 months, I'm expecting us to come down to the midpoint of this channel. So now you can see I'm following a process through reading this price action. This is the biggest bull bar on the chart. So this is a breakout. But because this is a breakout coming late in a channel, there's always a chance this can turn into a failed breakout, what we call a climax. One of the reasons for that is that when traders see a big bar, this is big risk, and traders are looking for the follow-through bar. At the moment on the monthly chart, we're a week in, and you can see we triggered the buy on the monthly chart. Sorry, I've just adjusted that target. I moved it by mistake. So there are stop entry bulls that are long above this bar. Now you can see automatically, instead of talking just about breakouts and failed breakouts, I'm now talking about orders. That's a long entry, a stop entry buy 1 tick above the high of that bull bar. There are other traders who got long 1 tick above this monthly bar, not wanting to miss out on the move up. You've got to remember as well that anyone who took a stop entry lower in the range is sitting on profits. A trader that bought this big spike is looking for a 1-to-1 move, 22,700. Traders that bought there suffered this amount of actual risk. So their 1-to-1 target for that risk was there and we closed above it. So they might be holding for more. That's about 23,000. So these traders took a stop entry. They never got stopped out. One thing I look at is actual risk. That's about 2,000 points. That means that if a trader buys above this bar, the risk level is probably about that. If they bought one tick above their high, stop is 22.2. If they bought the close of that bar after the pullback, they're already at their 1-to-1 target. So those traders might consider taking profit. If a trader waited to buy above this bar here with a stop down here, their target's a little bit higher at 22,400. So you can see I'm using stop orders, targets, risks, stop, success, and failure. Now we're going to look at limit orders. Where was a good limit order sell? Well, some traders will sell on a limit order above the high of this because they know there's a 75% chance that this is going to evolve into a trading range and they don't want to miss out on selling the top of it. Now, it's an aggressive strategy for most traders. My understanding of this strategy is this is a quarter position at best, and you are slowly scaling in 2 or 3 times that signal bar, trying to get a top and then holding it for a swing, a couple of legs sideways to down. That's got a reasonable trader's equation. For most traders, if they sold on a limit above these bear bars, that failed. If they sold on a limit above that bar, they failed as well. So that tells you that limit order bears are not able to make money. So what I've been saying for the last few weeks is that this bar showed those bears lost money, and we vacuumed up to where the next lot of bears might be selling, which is a likely area where bulls might be taking profits. So on the monthly chart, probability, risk, return, trader's equation for next week, well, this would be talking for this month because we're at the 8th of February, this bar needs follow through. The highest likelihood for this bar is that it goes sideways with some profit taking. I think there will be more traders waiting for the follow through and then buying the close of that bar if it's good enough. Why is that? Well, the risk is huge. If you buy up here, you've got a 2,000 point risk, which was the same as buying there, which was the same as buying there. But what's the difference? This has had quite a few buy signals already. So all the bulls that were already in have already had their risk and their reward. You want more bulls to get in after you. So I think the risk is high, which means the probability is good, but that means that the reward is probably low. So you'll buy up there with a big risk and a small reward. I think more traders will wait and see what the follow. So that's how you would follow this process on the monthly chart. And can we repeat that for the weekly chart? You bet we can. Momentum, magnets, measured moves. We broke out of a bull channel. We've got 1, 2, 3, 4, 5 bull bars in a row. So momentum is upside. We're always in long. Magnets are the same as before. We've got 22,000. We broke through 21,000 and we've got open breakout gaps. This was a breakout gap that we will come back and test at some stage. Let's talk about measured moves. If you bought this spike, your target's a little bit higher above 22,000. That was a reasonable spike to buy. If you bought this spike here, we went through your target and closed. They might be holding for more. That's up at 23,000. Here is a pullback. A pullback is a small trading range on a lower time frame. This is a measured move, and we're starting to go sideways. The longer time that we spend in this channel, the more that traders will use these smaller targets. Other bulls can see we broke out of the top of this channel. We got consecutive bull bars. That's a breakout and follow through. So we're still always in long. We've had spike, pullback to a channel. New spike, we broke below the top of that channel and we formed a trading range. Spike, pullback channel, spike, pullback channel test, spike, pullback channel. And now that is the low of the last channel. Other traders might see this is the spike and this is the start of the pullback up here. So now we have 2 targets for the bears to try and reach. But what do you notice about these bars here? Well, the first thing I notice is that these are the strongest bars on this chart. Where else can you find 5 bull bars as big as these? Open, high, low, close, all trending. Well, it's actually difficult to find. Here we've got a spike with pause bars, maybe down here at the bottom of the channel. Now we're going out the top of the channel with an equally strong, that's climactic behavior. I'm not surprised that this week was an outside bar. This is a spike and a channel, and so we're going to form a smaller channel in here. And traders are going to hope that bulls are going to hope this is going to keep going for a new breakout and form a bigger channel. Bears are hoping this is the last attempt from the bulls. They're going to take profits on their swings. Bears are going to get a second entry short to sell back into the middle of this channel and test the bottom of these trend lines. There were many attempts at double top and wedges, and they all failed, as you'd expect in a bull channel. This was an attempt at a double top, it failed. This was an attempt at a wedge, it failed. This was an attempt at a wedge. This was an attempt at a wedge. When we're always in long, better to trade the long side and bet that everything bearish will fail. So we're on a new breakout. If this is a new spike, 1, pullback, 2, if this is going to be a final flag, bulls probably want one more leg up. That's reasonable. You can see now we're down here talking about breakouts and failed breakouts. Let's talk about orders. If you put a stop down here and you buy the close of that bar, there's your 2,000 points risk. So you need 2,000 up. So you need 24,000. One problem I see for these bulls is that the higher time frame targets get us to 23,000. So you're 1,000 short. You're going to take a 2,000 point risk. A lot of the targets are up at 23. So I wouldn't be surprised if we get 2 legs pullback somewhere in here, so the stop can shrink to get up there. Another trader might say, yeah, but Tim, the stop is now below that. If I buy the close of that bar or buy above this bar, that's still only going to get me to 23. Stop entry traders that bought these spikes, well, these are very similar from the monthly chart as well. We got a target at 22.1. You've got consecutive bull bars here above the moving average. Your 1-to-1 target already got hit. So it did not close at your target or above it. So the question will be, do some of those bulls take their profit and run out of there? If you bought these 2 bull bars here, you're at your profit target as well. So a lot of the traders that bought a spike and got a pullback are around about 1-to-1. So I'm not surprised we're seeing profit taking. Big round number makes sense. We've done stop entries. There are no good limit or order entries for bears here. So I don't think we need to go through that. We've talked about targets. We've talked about risks and stops. So it's always in long. Probability is for more sideways to up. The problem is risk. Can you use a stop that's 800 points? Yeah, I think you can. These has got tails on the top of the bars. These bars have small tails. When the bars start to get tails on the top, we usually start to go sideways. We're starting to get tails. So I think it would be better to buy a pullback in this range on the weekly chart. So now we've moved to the daily chart. Let's look at momentum, magnets, measured moves. Spike, pullback, spike, pullback, spike. Pretty clear 3 legs up here. What do you notice about the momentum here? Well, it's all bullish. It's above both moving averages, and there's only 3 bear days. So this is bulls taking profits as opposed to lots of bears initiating positions. One thing I do notice is the pullback from this leg over 60%. I'm going to add that to my list. A lot of it's very subconscious, so it's more difficult to write it out, but I think this will help you follow along. Okay, so pullback distance. So we're always in long. We've got magnets we talked about before. You can see profit taking happening at 22,000. Is that a wedge top short? Well, now we've got to add something else. Let's add a few more. Momentum to the upside. Magnets. We've got big round numbers. We've got targets that we looked at the monthly for the monthly chart and the weekly chart. We're always in long, but I just noticed that the pullback here is into the lower third. That means there's a good chance that this leg is also going to pull back deep as well. In the market channel, we've got a spike and a pullback. There's a channel line. That means this is a spike and a pullback as well. So we've got magnets just above 21,000. If bears were to take control, a couple legs sideways to down to the moving average would make sense. We've definitely had 3 legs up. So possible wedge, but I think very difficult to sell on this chart. I think you're either long or you're flat. What about trend lines? Well, the moving average is always one trend line. Another is connecting the lows of this channel. So going sideways around 22,000 makes sense. All the gaps are to the upside. So it's a bull breakout. Bears are trying to get a double top. We know that double tops are a bad idea in a bull trend. So this is an attempt at a double top. Most double tops need a lower high to have a good reversal. They also need to break a trend line. So on a lower time frame, traders might be selling a test here. But we know on the daily time frame here, unless we significantly break this trend line, not a good idea looking for shorts, certainly not for a short swing. Bulls are going to buy and scale in lower. We've tested 22,000 now. We haven't tested 21,000. So I've been saying for the past couple of weeks, we're going to get back here. This is not enough of a test of a big round number. Stop order entries. Well, here is a strong spike and a pullback. So depending on where that spike, where do you put the stop for this spike? Well, here was a wedge that I think we broke out of. Many ways to draw it. Here's a set of bull bars. That's overlapping. So spike, pullback, you bought the new breakout. That's 1-to-1. If you bought the breakout of the new high, you're actually at your 2-to-1 target for 22,000. Here's a spike and a pullback. We said that was the start of the channel. So if a trader looks for a pullback, that's a 50% pullback here. Looking for one-to-one, they got it. They got a good close. So 22,200 could be another target for them if they're looking for 2-to-1. If you're a limit order bear, selling above there, I think, is very aggressive. Now that we've pulled back a lot, it made sense to sell above that bear with a wide stop. Remember, those traders are doing the opposite. They're selling here and higher because bulls are buying here for a measured move up. We're always in long. We got a reversal bar on Friday, and maybe Monday does the same thing. It just has a deep pullback. But this is a vacuum move into the lower part of a trading range. So it's not really providing you with a way to enter on this time frame. You'd have to be using you'd have to either change the trading hours, regular or Frankfurt, or be trading the cash index. So there we go. That's the DAX report for this week following this process. I hope you enjoyed it. Well, thanks very much for watching. I hope you found that valuable. In this video, we talked about context and bringing a process to understanding the chart in front of us. By having a consistent process, this is going to start to run automatically when you trade. And that means there's part of your brain that doesn't have to think on that and can just focus on taking better trades. I hope you get a chance to apply this next week in your trading, and please let me know in the comments below if you found it valuable. Thanks very much, and I'll see you next weekend.